Hi everyone, my name is Javier. I'm the founder of Accountalytics. Accountalytics is a CPA firm, it's an educational platform, and I help people get started investing. So today I wanted to talk about investing. I wanted to talk about an app that I discovered recently, which I am a huge fan of, and it's called M1 Finance. M1 Finance advertises socially responsible investing. And what do I mean by that? Or what are the, what I noticed the biggest mistake people make is they have a little bit of money that they've saved up over, a year or something. Let's just say you have $10,000 saved up and you want to put it in the stock market or you want to start investing in mutual funds or ETFs, etc. The mistake I see people make is that they take that chunk of cash and they throw it all into one thing or maybe a few things. But hear me out. The reason why I think that's not the smartest idea is because you are essentially putting all your eggs in one basket. M1 Finance allows you to spread your eggs into a pie. So, what do I mean by a pie? Well, as you can see here, it's kind of hard to see through this video, but there's different colors, and each little section represents a pie within my pie. So, for example, there's an e commerce pie, there's a futures pie, there's a coronavirus pie, Joe Biden pie, a cannabis pie. There's all these different sectors that I personally believe in are, gonna bring me a good return over a long period of time. So this is the key concept here. It's called average cost method. So every week I have M1 Finance pull $25 out of my bank account, and it takes that $25 and it invests it into that pie. As you can tell, this pie consists of several different pies within the pie, right? So let's talk about those sub pies. For example, I have a big tech pie, and I picked big tech companies that I think are going to be here in the future. So, for example, I personally think that Uber is still going to be around. I think that Airbnb is going to be around. I think Tesla is going to be around. I think Apple, Amazon's going to be around. I can keep going, right? So all those are within that sub pie. So I told it, hey, take my $25, invest it in my pie. Now, out of that $25, I want you to spread that $25, 20% into this sub pie, 10% into that sub pie, 5% into this sub pie, 40% into that sub pie, etc. You're free to allocate it however you'd like. Now, within the sub pie, it's the same concept. There's X amount of companies, and you can take that chunk of cash, right? It's not $25 anymore. It's whatever you told it to invest into that sub pie. And it takes that chunk of cash, let's just say it's $8, and it spreads that $8 however you tell it to. Hey, I want 30% to go to Tesla, 20% to go to Apple, 10% to go here, 10% to go there. So I hope you're following along with that concept, right? I have several pies. Within my pies, I have sub pies, and I take different approaches. I have one pie, which is the one you're looking at back here, which is my long pie, right? I picked all these companies within all these sectors that I think are going to be here in the future, are going to bring me a great return on my investment, and I'm holding on for dear life. Then I have a different pie. I call it my dividends pie. So this one is not specifically meant to. I mean, obviously, I would like it to grow, but it's meant more to get dividends. So I buy only companies that are going to give me dividends. They're known for the dividends, and you can research this by looking at a company's information on what's their dividend yield, how often have they paid dividends, and the point of this one is to create passive income, right? So right now I only have about $500 in that pie, but again, $25 every week keeps on buying. It keeps on buying. Imagine in 10 years. Imagine I keep doing this. Not only is the stock market going to keep going up, maybe have a drop at some point, but it's going to keep going up over the rest of our lives. And not only are those stocks going to grow, but how much dividend I'm going to start collecting after, 10 years. I might have hopefully, 10, 20, $50,000 in that pie, and my dividend payments are a few $100 or maybe even a couple $1,000. To put in perspective, out of those $500, I remember checking when I only had about $330. I had been doing this for like a month and a half, and I had already received about, I think it was like $7 in dividends. Doesn't sound crazy, but when you do $7 divided by the 330 something dollars, like that's a huge return on your investment. So with that, think about what it'll look like in a year or 5 years or 10 years, right? Compared to my other one, the first pie I was talking about, that one I'm barely getting any dividends back, but it's grown significantly, right? So it's called being diversified. I'm not gonna go on about every pie I have. I'm trying to get you guys associated with the concept and why I think M1 Finance is valuable, right? So there's days that the stock market is all the way up and things are going well and everybody's happy and everybody on Robinhood thinks they're the best investor in the world and they're gonna quit their jobs and good for you. And then there's days where, I don't know, let's talk about March 2020, right? When the stock market just went to shit. Went to nothing and everybody was panicking, right? Well, this is the thing. Everybody's gonna be struggling when that happens. But the difference is that with this setup, it's gonna always keep buying, right? The point is not for you to, don't get me wrong, if an emergency you need to sell, go ahead and sell. But the point is to just keep buying, keep investing, keep contributing money towards your pies and take advantage of the growth, of the compounding interest, of the passive income. You know, personally, the way I set up my finances, and this is the final piece of advice that I leave you with, my paychecks come in every the 15th and the 31st of every month, right? I'm on a semi-monthly payroll, which means I get 24 paychecks a month. 24 paychecks a year instead of 26 paychecks a year, which is people that get paid bi-weekly. Fun fact. Anyways, so out of my paychecks, I get 60% of it goes into my savings. 60% goes into my checkings, 40% goes into my savings. I live off of the 60%. I don't ever touch this. So this is my operating expenses, right? Life, you gotta eat, you gotta pay your cell phone, you gotta pay your rent, you gotta just deal with life. And then you got your 40%, right? I try not to touch this at all. However, all my investments, the ones that are going into this pie, the ones going into my IRA, all the things that I'm investing in the future come out of this pie, right? I still have the majority of my overall, savings, including all my brokerage accounts. I have 80% of it in cash, right? Because I don't invest what I can't afford to lose and I need my emergency fund. But all these little $25 contributions here, 25 there, 100 there, blah, 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 is all coming from the savings account. And what's the difference? Like, yeah, I'm risking a little bit of it, but look, my returns are ridiculous compared to my 0.001% interest that I get on the out of the bank. So with that, I think I've given you enough information to make you think twice about your decisions and how you're investing. I hope you look into downloading M1 Finance, even as just, spreading your eggs. It doesn't mean that you're gonna have to liquidate all your other investments and put them in here. Although you can, in fact, you can even transfer them over without having to sell. But I hope it opens up the concept to you and helps you ask questions as to why investing this way is better for the long run. It's less stressful, and you can really benefit from it. If you want to sign up, there's a link below. You follow me on all the social media platforms at Accountalytics. If you go on my Instagram or Twitter, there's a little link for the M1 Finance. You could look at my pies, and you can even invest in my pies, by the way. I'm allowed to share my pies with you. So if it's something that intimidates you on, like, I don't know where to start, well, start with my pie. And maybe you think Chinese artificial intelligence is dumb and you don't want to invest in that. Cool. You just click delete and you still got all the other companies I picked. It's a good way to get started. They also have their own professional pies that they've built for you. Different approaches. I've picked a few of those as well. So with that, I hope this adds value to you. Please click the follow button, support Accountalytics. Always trying to drop content to help you guys create a better future and hopefully build wealth in the long run. Thank you.